All right, good morning. I think we'll commence and begin. Is everybody ready to go? Excellent. Welcome to the September 27th, 2023 meeting of the City of New Orleans Revenue Estimating Conference. Thank you for joining us here today for this important discussion. Today, the Revenue Estimating Conference will discuss general fund revenue and adopt the 2023 revised forecast and savings fund certification. Tiffany, will you please proceed with roll call?
Thank you, sir. Good morning, all. And for those who were celebrating the Jewish New Year, Shana Tova. Honorable Mayor Latoya Cantrell. Honorable Member Joseph Giarrusso. Honorable Member Helen Moreno. Chief Administrative Officer Gilbert Montano.
Present.
Chief Finance Officer Norman White.
Present.
Professor Mara Baumgarten-Force.
Present.
We have a quorum.
Excellent. We will dive right into any discussion and or adoption of the minutes from the June 21st, 2023 REC, which had been previously distributed. Is there any discussion or would someone like to move for adoption?
Joe move for adoption.
All right, it's been moved. It's
I'll
been
second.
seconded. All those in favor, please say aye. Or vote your, is it vote your machines? My apologies. Okay, it looks like the motion passes. I'll turn it over now to Matthew Cooper to discuss the city's current and ensuing general fund revenue. And obviously, we'll, as a board, take the liberty to interject any questions as you proceed. But Matthew, please move forward.
Excuse me, I was sorry, I was fiddling with the computer. Did you adopt the minutes? From the previous-
Yes.
You did? Okay.
Yes.
Okay, excellent.
Well, good morning.
Good morning.
We did.
Yeah. Correct. Okay, thank you. Yeah, I'm again, Chief Economist Matthew Cooper. So let's dive right into this. So couple of really we have some housekeeping things and some important housekeeping things. So let's just get into it. So number one is we're looking at the audited actual general fund revenue from 2022. We're looking at from 21. We're looking at 2022 compared to 2021. So we know that there was a huge increase in revenue from those 2 years. And what that really describes is a recovery period from the pandemic. So that's why, you know, we're close to 20% recovery in that year. But that's a 1 year kind of recovery thing, and it's just not going to be sustainable going forward. So to a public health perspective, now, of course, a pandemic or any other type of public health crisis presents a risk for revenue going forward. But we're, even with the most recent news about it, things are very, very positive and very, very optimistic moving forward. Again, we're in New Orleans Parish, have a higher vaccination rate than the rest of the state. So things are looking good there. Moving on to current macroeconomic conditions, inflation. So we'll start there. Inflation is still increasing. Inflation is still a significant problem for the city, for local businesses, for citizens everywhere. So year over year, we have to remember that the year over year reading is versus just 1 year earlier, which is when inflation was in its most significant increase in a long time. So the year over year period reading is somewhat misleading. So, prices remain something like, well, the exact statistic is 17.4% above levels before inflation really started to take off. So that's something that is still affecting everything. They have not declined at all and are continuing to increase. Just a couple more statistics for you, not on this page. Gasoline is 170% of what it was in January 2021. Crude oil is about $90 a barrel. That's been volatile for the past week or so. That's obviously a risk for everybody. These were some statistics that I wanted to present that were really very kind of illustrative of what's going on. Basic household expenses. So the biggest increase there is $709 more than fall of 2021. So 2 years ago, things were $709 less expensive than they are now, just for a basic basket of goods for households. And that's a significant issue that everybody is dealing with, and that's why people feel like the economy isn't really doing well, and that's why people tend to hold back on their money, hold back on their spending, say. Of course, another issue affecting that is household income has actually gone down when you look at it in inflation adjusted terms over the past 2 years. Inflation has outpaced wage increases that people may have seen. Then just one, one thing that, a lot of us spend money on are cars. So new vehicles payments have increased significantly. So in 2021, average car payment, it was about $582. Now it's $730. Used vehicle, $440, and now it is 2 years ago, and now it is about $530. Basically, what that means is a lot of people are priced out of the car market. That's a analysis that was done by one of the credit rating agencies. Experian is a company that does people's credit rating, that gives you a credit score. So that's one of the big 3 companies that does that. That's where that statistic comes from. GDP. So this is the year-over-year reading. Again, we're over way at the right now. And so you need to remember, you see that trend of increasing those 3 quarters of increasing GDP in a year-over-year measure. We're measuring against what happened last year. So last year we were in a negative growth quarter. So that's also illustrated right here, where these are the components of GDP, where essentially things are either anemic or negative. It's been a typical GDP growth rate is about 3%. We've been trending below that significantly, and all of these different factors are leading to that. Things are being relatively sustained and on an even keel, but it's again, anemic growth and less than what we'd like to see normally.
Question?
Sure.
Just for clarification for all, the growth numbers, however, are adjusted for inflation because they're real numbers. Is that correct?
Yes. Yes, they are.
Excellent. Thank you.
So payroll job growth, just as far as jobs and those economic impacts are concerned, have been growing. Now, this is just total jobs year over year. So things are better and than they were a year before. They continue to get better as far as the jobs locally and in the state of concern. But that's a recovery trajectory. That is not a growth trajectory. Since we haven't quite gotten back to where we were prior to the pandemic, we still refer to this as recovery. And so that's a major factor leading into all of these things that I'm presenting here this does not represent growth. This represents this you could probably look at as a seasonal issue, because while unemployment went down, the labor force also went down. So that sort of indicates that there are maybe some jobs open, but there isn't the labor force there to actually fill it. That's a labor shortage issue. But then again, this statistic is representing the August reading. So that could be due to local seasonal factors. It's kind of a slow period for the city. Also evidenced here in leisure and hospitality, again, the August numbers, where that big drop you see around 2020, that's the pandemic. And again, have not recovered yet, still on a recovery trajectory, which will be a factor for the rest of 23 and 2024. And again, further evidence to that fact, this is traffic at the airport at Louis Armstrong. We had a good Mardi Gras season. The big thick blue line is this year, and that's versus the rest of these other previous years. And still, we haven't recovered to a sustained level that is consistent with pre-pandemic activity. So that's still a concern. Look, as a result, revenues are still on a track to really be outpaced by government expenditures over the next couple of years. This has again been a theme for all of the presentations that I've given to you, and this is really something where we see fund balances filling in the gap between actual revenues and expenditures, which is a suboptimal solution. So the one of the big issues today is we're proposing a forecast upgrade, not due to really anything going on in the economy or going on in revenues, but really just due to some one-time factors that are happening, one-time payments that we've received. The biggest issue is we've got a decline in one of these components, but an increase in another component. a net of 21.2 million or $21.189 million increase in the 2023 forecast for the rest of the year being proposed here.
Before you go on, Matthew, if I can, now, I know we talked about it yesterday, Joe, during the budget committee meetings, we can detail this a little more clearer. Clearly, the fines and fees are down, right? We understand why that's the case when it comes to traffic and also the parking. I think those things are coming back up. And then in addition to that, the amount of money return we have on some of the interest rates, given the fact that we have money in the bank and for the first time, so we can now generate those interests. The interest has returned over the last couple of years. And then I think we received one payment from, I believe, an authority, a $10 million payment. That's kind of represent the big $28 million net against the 6. I think we kind of discussed a little bit more yesterday than you did today, but thank you.
Thanks to NOBC for that $10 million.
$10 million, yeah. NOBC. There was also some, legal settlements and also insurance settlements and one legal settlement that ended up being a very, very big swing positive, but again, one-time payments, not things that we can rely on in the future.
Look like I stole your thunder on your next slide. Sorry about that.
I can get it back. It's all right. But yeah, it's broken down right here, and there are, of course, like I said, these issues. So just keep that in mind when we're looking at not only the increase for this year, but going into the forecast for next year. That there are these one-time issues for 2023. These are known issues. So that's why things are looking so positive right now in 2023 revenues. Before we
One
get
second, I
to,
think we need to probably move
ahead.
on to adopt the 2023 number.
I need to do what,
We need to move to adopt the 2023 number.
please?
Your revised number for 2023.
So may I have a motion for adoption of the revised 2023 number based on the information that's provided? Vote your machines. And the motion carries. Please proceed.
So before we get to the 2024 preliminary forecast, we have this housekeeping measure to do, which is the savings fund certification for 2023. Based on the past 5 years of actual general fund revenue, which is presented here, the savings fund required balance is 31.3 or 31.25 or 26 million dollars. Must I pause for another certification?
Yes. Is there, I was remiss at the last time. I don't see anybody. Is there any public comment on this particular item? Seeing none, I'd call for a motion for the adoption of the 2023 Savings Fund certification. Please vote your machines. And the motion carries. If you'd like to discuss the 2024 general revenue forecast now, that would be great.
Here we are. So again, just want to emphasize, we remain in this recovery trajectory. It's not a growth trajectory. We saw some significant growth in revenues in between 21 and 22, and in 23, we've also had some increases. But again, 23, what we just talked about was due to a lot of one-time factors that's not going to carry into 2024. And so when we see what we're projecting for 2024, it's important to keep in mind that this is probably a somewhat slower rate of recovery than a lot of us were looking for. This represents a really kind of conservative and a really sort of realistic, more forecast for next year, based on all these factors that I've been talking about. So one thing that's important to note in property tax, this number for 2024 presented in the green column there, that at the top there is we've removed both NORD dedicated and Parkway dedicated funds from that number, the general fund. We're not counting them as part of the general fund at the moment. And so
Let me just interject and explain why. I think we've heard many times from various different entities that, hey, is our millage going directly to our particular agency? So in the efforts to decouple or not convolute the mixing of revenues, and I think at the discussion and request of counselors as well, we've separated the actual millage that goes into these particular entities and separate and apart from the general fund. So that's the reason and rationale relative to that.
Right, and if I can add your word, even though I know we look at it with Matthew explaining from 23 to 24, there is about a 9.5 increase. But if we add the NORD and the Parkway at another 13, that's the actual increase, because we moved those things that you're discussing, NORD and Parks and Parkway, over in a special fund, so we can kind of manage those separately. You see the 9.5 increase alone on the sheet. But if you look at the true number, if we were doing apples to apples, it would be roughly around 22 to 23 million increase.
yes, the reality is we're just kind of shifting the way that we count that or represent it in this table, basically.
I guess I have a couple of questions really quickly. It looks like property tax is lower for 2024 than 2023.
Yeah.
I guess I'm struggling with how that's the case when assessments have gone up by 23%.
Well,
Right, if I can take a shot at it. So that's where we remove NORD and Parks and Parkway and move it to like a special fund. And so it's not counted for here because the tax are specific, where we add that back, apples to apples, and maybe we can be a little more clearer and send you some information. It'll be an additional 13 million on top of the 158. So it would be more. What we're doing is deciding, instead of putting the NORD and the Parks and Parkway taxes in the general fund, we're separating it so we can now compare those tax collected for those specific entities, so we can compare it to those specific costs.
But if and again, I'm not trying to be
No, that's
preposterous, but
go ahead.
if you assume 15%, like they're going to get a haircut. You assume 15 and not 23.
It's actually not proposing that. So with all the issues surrounding the assessment, that the quadrennial assessment that happened, that we heard a lot about back in August, there's still a lot of questions about how the council is going to deal with that, the increase, and also the final number after the what is the appeals period and all of that. So this is assuming that the council lowers the mill rates to the point where it's essentially everybody's tax bill is the same. So revenues for property taxes and the mill rates are going to yield the same amount of revenue. That's what it's saying.
But
So if I can hear Joe's
Go
full
ahead.
question, so.
sure.
No,
No, okay, I guess, but that millage is half of the equation. I agree with millage is half of the equation. I agree with that. And we try to be very careful and it's complicated about roll forward, roll back. People get confused very easily.
Yeah.
But the bottom line is, if your assessment goes up, let's just say $125,000, even if we keep the mills flat, you're still going to have a tax increase because the value of the mill.
Right. But there is that provision in state law that says that whatever percent increase the assessment is, the council has an option to actually decrease the mill rate at that level. And in an attempt to basically keep the receipts that the city receives the same.
So if I can address this, Joe, one is I think this is a conservative estimate. Let's just say that.
Right,
The other part is if we were doing apples to apples as we did last year, the number would be 173.
right.
And so it would be an increase versus last year. You don't see it over here because we took some away and aligned it to a different sort of fund. And so what I can do is get you a breakdown so you can see it. The overall will be roughly around anywhere from a 10 to $12 million increase.
Yeah.
After we get the true number from the assessor, then we'll assess it and figure out what those actual increases will
Okay.
be.
What,
And to your point, new construction, those things are normal that will add to it.
right,
Once we get it from the assessors, we'll be able to put it here.
right.
Remember, this is the first run that we have. When we come to the next one, we'll have those full numbers for him to get it.
And when
That
will when we have the assessors numbers?
Well, we have the preliminary one now. I think we have a meeting set up next week with them,
Okay.
but I think it's always at the last minute. I think you understand. So we're trying to wait because we have to build a budget around it.
Right, I got it.
And so we want to do is make sure we have the correct numbers,
Okay.
realign it, and then get you where you can see where we realign some of the things. So the reduction, we start off where we were before and then move where we were before and then move it over so you can see we moved it and then the additives.
Okay, thank you.
Sure. Sure. Okay, yeah. I think that's,
Okay, so there's no need to vote on that particular item. Thank you for the information. We are getting close to the end here. Are there any other matters that need to be discussed by the board? Seeing none, I will move to adjourn. If you'd vote your machines, we will call it a day.
I'll second the motion. Motion and second.
Motion and second,
Well, Dr. Barr.
and then
Right.
all right, thank you, everybody.
Yeah, no, taking that.
Yeah. Thank